We saw the Nikkei gain around 10% in 2016, Trump's election victory and subsequent bounce in the dollar giving a boost to the export-driven Japanese index. David Song, currency analyst at DailyFX, joins us now. David, what next then for the Nikkei?
So following the 10% advance in 2016, the broader outlook for the Nikkei 225 remains supportive, even though we are seeing some range-bound conditions to start off 2017. And as the Bank of Japan still struggles to achieve their 2% target for inflation, it looks as though Governor Kuroda and company will largely pursue their qualitative easing program with yield curve control in 2017. And of course, we did see the central bank further delay these expectations last year, pushing those back to 2018. We'll see whether or not we get a similar dynamic, but for now, it looks as though the BOJ will continue to pursue this highly accommodative policy stance. And looking at price action as well, we saw some meaningful developments with the Nikkei 225 actually breaking out of a long-term trend from all the way back in 2015. So bringing up a weekly chart of the Nikkei, we saw this downward tilt in the exchange rate, this bearish trend, if you will. You could even call it a bearish channel, if you will, was largely taking shape after we made those highs in June of 2015, sort of a double top formation there, if you will, to get a bit technical. But we got that meaningful decline, saw this double bottoming formation happen last year, broke out of this formation, and not only did we see this in price, but also a similar dynamic here in the relative strength index. So as we're seeing this large develop, we're getting some confirmation. As we're seeing the momentum indicator highlight a very similar dynamic, we'll stay broadly supportive here for 2017.
In December, the Bank of Japan said it expected moderate economic growth to continue, while one committee member called for the bank to target a steeper yield curve and raise the curve that did cause a slight deterioration in risk appetite. How does that rhetoric play into forecasts?
So we did see some mixed language from the Bank of Japan, and I think market participants are still trying to interpret what this yield curve control means. So with that said, they're trying to keep that 10-year yield right around 0%. Whether or not this means that the BOJ will step up, maybe tone down its asset purchase program, I think that's sort of the color that market participants are looking for here. But nevertheless, and as we heard some of these concerns come into play, Governor Kuroda was very adamant that this is not any sort of tapering, that the Bank of Japan will continue to pursue this highly accommodative policy stance. So, I'm not surprised that we are seeing some mixed tones coming out of the central bank, again, given these unorthodox measures. But for now, I think this risk rally will continue, especially throughout 2017, as we're not only seeing this in Asian markets, but if you're taking a look at Europe, maybe we could attribute that to the ECB's own easing cycle. But even with the U.S. equities market, we're seeing record high prices there, and certainly a dynamic that we do not want to fight here, as it looks like we may see the pickup in risk appetite continue throughout 2017 as well.
You talk about the role that risk sentiment has played in the Nikkei's move. What about other trades that will benefit?
So with the pickup in risk appetite, key theme that we'll watch, a key trade setup, if you will be the carry trade. Of course, key pair or carry pair du jour that market participants like to look for will be the Aussie yen. And of course, we'll see whether or not Australia will be able to retain their AAA credit rating. But for now, we are seeing some similar dynamics in price. What's happening with the Nikkei 225 looks though could be materializing here for the Aussie yen. So even on the Aussie yen, maybe a shift in market behavior here, but I don't want to fight what's happening in terms of price, as we are again seeing some similar dynamics between the Nikkei as well as the Aussie yen. And following the marked appreciation in the Japanese yen, we'll see if that will also be a key theme to watch over the course of 2017. But looking at near-term price action and a broader outlook for the Aussie yen, we've broken out of a similar downward trend here, but this one is a little bit longer dating than what we saw in the Nikkei 225. This one stretches all the way back to 2014, but we got a clear break of that here. And again, not only in price, but was also reinforced by a similar setup here in the relative strength index, with the momentum indicator here also breaking out of this longer term bearish trend back in 2016. So with that said, we'll continue to watch some of the top side targets from where we sit, and as long as we do see this the pickup in risk appetite continue, as long as we see this advance in global benchmark equities continue, looks like we may see pairs such as Aussie yen, maybe even pairs such as the Kiwi yen continue to benefit off of these dynamics.
David, thanks so much indeed. David Song there, DailyFX in New York.